doctor client, had a great year, owns a private company as well, $22 million net income this year. So he's going to pay $11 million in tax. So long story short, 2 strategies applicable to multiple types of income. Instead of writing an $11 million check, he's writing a net $2 million check.
Wow.
$9 million in his pocket.
Hey everybody, I'm Samantha Parrinello, your host, and welcome back to another episode of Wealth Unfiltered. I have an exciting guest for you all. So those of you who are thinking about getting a financial advisor or trying to come up with your wealth strategy, this is going to be the episode for you. So please welcome to the show the CEO of Cornell Capital Holdings, Dana Cornell. Awesome.
Yeah.
Welcome to the show.
Thanks for having me. Glad to be here.
Absolutely. Well, we are very excited to have you on. Our listeners, I know our last season, we actually had an episode on estate planning. And we know that in general, our listeners really love getting financial advice. They really are trying to build their long-term wealth. So having an episode like this, I think will be so beneficial for our listeners. So we are very grateful to have you. But if you could, I'd like to get started with a little bit about your background. As I recall, you started your company in 2021, and you actually left a big firm, Morgan Stanley, to go all in and create your own company. Is that right?
I did. Yeah. I'll give you the background. It starts a little bit before that, and it'll make Cornell Capital a lot more relevant. I grew up in a small town, Western New York. I did not come from wealth, so had to figure it out on my own. Literally started knocking on doors just to meet people, to see what their needs were, hear their problems, how I could add value to them. The unique part of that was I was out knocking on doors at the end of 2007 into 2008.
Okay.
So for those of us who were around back then, it was a challenging time, to say the least, for people that were invested, especially in traditional strategies, right? So it really shaped my view of how do you build wealth. Yeah. And it just sent me down this rabbit hole of being obsessed with, why does the average investor get certain results and certain advice, but why do the elite get a totally different playbook? And that led me to, as you said, Morgan Stanley. There I managed $1.4 billion when I literally walked out the door. They asked me if I needed mental health counseling, because you do that in that business. It's very profitable because it's built for the firm and the advisor. It's not built for the client. We could talk about that all day. I had kind of maneuvered myself into the family planning division, which was 50 million liquid net worth and above, and is the top 1% of financial planners in the firm.
Wow.
So I quickly remember the transition of a business owner I had exiting his business, and I couldn't give tax advice. I had to kind of give the corporate company line to him, walk in the new boardroom, and it was a family that sold for 125 million. And we lead with tax advice. We lead with alternative investments, which is the opposite of what I'm supposed to say to every other person, right? So it just didn't sit well with me. The corporate side of wealth management didn't sit well with me, and it's just not built for the individual investor, very much so. So I just decided I needed to leave and do it differently and take the good of what I learned there, but distill that to the average investor, or the comfortably wealthy, as we say, and just kind of show people how real wealth is actually made.
Yeah, that's amazing. So I know your company really does focus on tax mitigation strategies, risk management, cash flow, and, alternative investments that you wouldn't be able to find in those other traditional companies and firms. Can we talk a little bit about, you kind of touched on the why, but really the differences between what your company provides versus a traditional firm like that?
Yeah. So, you look back now and the advice I gave, and I truly thought I was giving the best advice that I knew, right? But you don't know what you don't know. And then once the curtain's pulled back, you see a different side of things. That traditional wealth building advice is built to keep you in the middle, just well enough to stay paying your fee, not well enough that you don't need your advisor, and in the dark just enough to really not understand what your options are. So what we do here is distill it down into basically what I took away from all of that is there's 6 levers that you can pull that really drive the majority of the success of building wealth, right? And you can 80-20 that down to really 2, quite honestly, that really, if I did nothing else for clients and just taught them that, which is really tax mitigation, and then return enhancers and investments that pay you multiple ways. So you have leverage on your time with the income first approach, which is our trademark
Yep.
reverse financial plan, right? Help me buy your time back faster. I've done over 20,000 plus financial plans in my life the traditional way. And I always thought it was insane. You build this pile of money, hoping and praying 2008 doesn't come to pull one income stream from your stock and bond portfolio.
Right.
And I can give you 3 to 5 different income streams from private real estate, private equity, private debt, so you're insulated from those types of events. And that's how ultra wealthy capitalize on that versus being crushed by it. That's a little glimpse into the two main wealth drivers, the levers you pull, and you pull them the right way at the right time, totally different outcome.
So is your strategy when someone comes to you and they say, I'd like to switch firms, or I'm coming to, an advisor for the first time, most people typically already have some type of portfolio created, whether they did it themselves or somebody else has helped them with that. Is the first step really doing like a portfolio audit?
It is. You nailed it. So we do a financial audit, right? It's our wealth diagnostic. And really, it's outside, independent, non-biased look at everything you have going on. And we look at how do we protect what you have first? How do we save you in tax, fees, structure, liquidity? How do we protect where you're at and establish your baseline? And how do we turn that around and enhance what you're doing on the growth side without increasing your risk and ideally reducing your risk by true diversification, right? Because the days of stocks versus bond diversification is long gone. If you're in those portfolios, you see it and feel it. Even though your advisor tells you you're properly diversified, you're not. So that's what we're doing. So it starts with the audit just to establish your baseline of where you're at, and then identify, hey, here are the 2 or 3 things that are key drivers for you where you're at. So you don't have to disrupt your life. You don't have to alter your entire strategy. But there's a couple things that usually we find with clients that if you just do that, it makes a massive impact to the bottom line. So that's where we start.
Is there one strategy or something that you do right away with most clients to help? Because you talk about the wealth engine and like really trying to like create more income for them. Is there one thing you deploy right away? You're like, this is a strategy for most everyone who joins you?
Yeah, honestly, we just talked about this with the team yesterday. If we did nothing else, I would just do tax mitigation.
Okay.
So people think, I hate saying the line of, well, you made a lot of money, paying tax is a good problem to have. It is not, that's not true, right? Your CPAs are great, but they're trained and their mind is compliance, right? File your return efficiently. Don't throw a red flag. That's not a tax strategist. So I learned just being in those rooms, how to interpret the tax code to use that to your benefit. So if I can save you 100, 200,000, 500,000 off your tax bill, if I just did that, right, it's usually moving the needle more than anything else in your investment portfolio to begin with.
So most people feel like they have to have a CPA and an advisor, but you guys kind of are like an all-in-one stop shop for that then.
We are. What we don't do, and I make the distinction between strategist and tax filing, right? You still need your CPA to file your return. We don't do that in-house, and we get that question all the time.
Okay.
I want you to have checks and balances. You want our firm to reason it out with your CPA, and usually that's comfort knowing that when we come to an agreement, you should feel confident that it's the right strategy for you. We'll devour the tax code, apply it to your situation, your income source, how you're actually filing your return to show you how you can maximize that and keep the most in your pocket. Right? And that's typically what your CPA isn't doing, doesn't have time to do, and just isn't, the mindset is not that with a traditional CPA.
Absolutely. You touched on diversification in the portfolio. So a lot of people, when on their own, at least, when they're trying to create their strategy, they try to figure out, how to deploy their portfolio by like a structured number. Do you guys have like percentages that you are actively using, or is it just like a case-by-case basis?
Yeah, honestly, a combination of both. It starts by really we need to define, do you have a misalignment of your goals? And most people do.
Yeah.
Right. So if you can buy into the mindset shift of why are you saving money in the first place? And as in my old world, the traditional world, everybody used to say, hey, what's my number? Used to be a commercial, ING. They walked around with a big orange number on their shoulder. What you're really saying, though, is how much money do I need to stockpile to pull enough income at some future date
Right.
to support my lifestyle?
Right.
That's what started the reverse financial plan and the income first approach. Like, why would we just not find investments that produce consistent income that buy your time back now? And when we started chunking down your time, okay, you have this much money, I can produce this much income. That gives you back 20% of your time, 50% of your time. Ideally, we get to work is now optional for you. That's a different level of freedom that most people don't achieve. And then you're eliminating the risk of a stock market fluctuation that throws you off, right? So just totally different mindset, realignment of your goals to begin with. And then we get down to the actual percentages to figure out where you need to be from an income standpoint.
So how do you help them find reliable cash flowing like assets or, investments that do exactly what you're saying?
Yeah, great question. It's one of the biggest risks I see. So people will dive into this. And quite honestly, this is what sent me down the path myself. I invested in a private real estate deal thinking I'm a financial advisor. I know investments. And then you quickly realize it's a totally different world,
Yeah.
right? If you're not versed in that. So I went out, got a different designation, spent hours, years figuring out how to do the proper due diligence on private investments. So one, you need access.
Yeah.
Just from 23 years in the business affords me a Rolodex of people that have above average quality deals. And really it depends on the operator,
Right.
right? That's one of the first things we check. From there, do you have a team of people that are versed and understand how to actually do the due diligence on that particular investment, right? Because every investment can sound great on paper, right? Every ad you see on Facebook looks great. All the returns sound great until something goes wrong.
Right.
So you can unpack that and figure out where it could go wrong and what is the action plan to fix that. You're really setting yourself up for risk that you can't quantify. So that's really those two things, access and due diligence, the underwriting of that, allow you to develop a portfolio to complement what you're already doing and reduce your risk overall, but produce the income that you need efficiently.
So how do you guys help find alternative assets to place for people?
So again, my network, right? So half of my time is spent sourcing, interviewing private opportunities, whether it's private real estate, private equity, private debt, and that's my world. So for the last 15 years, that's essentially all we've done is allocate investor capital to private investments. So once you get a reputation on both sides, we can efficiently raise capital for private real estate developers, so on and so forth. And the investors now know that we have a track record of being able to put them in properly diligenced deals. That world combines and it just kind of breeds on itself, right? So we have a list of preferred partners in every one of those categories that we'll go to first. And if they have opportunities open, but that's my job, is really to find and source the correct opportunities to match our clients' needs.
I can ask you, what are the types of alternative assets that you provide opportunities for?
Sure. So the overarching theory is we match your old 60-40 stock bond portfolio. The equivalent is a 60%, 40% private investment portfolio. And that's made up of venture capital, private equity, so basically business ownership, private real estate, and then there's obviously subcategories of that, multifamily, self-storage, triple net lease, you name it. And then there's private debt beneath that, and then your liquidity bucket, right? So that makes up the bottom 40%. So that's how we're allocating capital for people. And then we source preferred partners in each one of those categories and allocate accordingly.
Do you have people come in and ask you, like, I saw this new AI trend, or I really want to get involved in like gas and oil? And do you guys even entertain that? Or do you shut things down pretty quickly? Or how does that work for you?
Yeah, that's a great question. Yes, as the first answer, we get those all of the time. Clients will bring me deals nonstop. Hey, this is the greatest thing. My friend brought me this, all the things. The reality is we're sourcing deals in every category, including oil and gas, including AI. AI is an example. We use a lot of pre-IPO exposure, right? Companies that are proven on the upswing, fill a need in the AI space. There's so many opportunities out there. I think the key to it is, can you get a level of comfort with who is operating the opportunity? And does it fit into the overall investment thesis?
Right.
And if the thesis works, we don't need to falter from that, right? You can chase shiny objects all day long. people end up getting in trouble in my experience doing that. Yeah, we'll entertain it. And from time to time, we'll take a look at outside opportunities, but we're constantly sourcing and underwriting deals all day long. So we kind of have our go-to list, unless something needs to be placed.
You were talking earlier also about tax strategy and that being one of your main focuses. So when someone comes to you and they say, gosh, I have this huge tax bill and, or like I got a huge raise or a big bonus or they had a liquidity, event happen and they're trying to mitigate that. What's like the number one strategy that you immediately go to like help with that piece?
Yeah, great question. I'll give you an example from just this week. Doctor, client, had a great year, owns a private company as well, $22 million net income this year. So he's going to pay $11 million in tax. So we get pretty creative with that, and it totally depends, to answer the second part of your question, on how did you source your income? What type is it?
Okay.
That determines the strategy that's applicable.
Mm-hmm.
Okay, so in this situation, we used, thanks to the big, beautiful tax bill coming this year, it gave us back bonus depreciation. So for him, what we did was allowed him to invest in a privately structured partnership where we bought farm equipment for the largest organic dairy farm in the Northeast. Kind of boring, but it works, right? That gives us bonus depreciation. Because you're a certified farm, you get a 20% tax credit on top of that. So very efficient to offset tax as an investment vehicle. So what we're trying to do is turn that liability into an asset for them, right? They then get an income stream from those vehicles being leased from us, and then they get a return of capital at the end of 3-year term. So on top of that, we use a trading strategy that works for multiple types of income. So long story short, 2 strategies applicable to multiple types of income. Instead of writing an $11 million check, he's writing a net $2 million check.
Wow.
$9 million in his pocket, right? So that's the type of thing, and why I say if I did nothing else, I would lead with tax strategy first.
Yeah.
And from there,
That's powerful.
Yeah, it moves the needle quickly.
Are you looking to build sustainable wealth and achieve financial freedom? Viking Capital can help you do just that through multifamily investing. With a team of seasoned real estate experts, Viking Capital conducts deep financial analysis and data-driven asset management to deliver outstanding returns. Their strategy focuses on low-risk opportunities with significant value-add potential, preserving your capital while maximizing long-term growth. Join them and be part of a success story. Viking Capital has acquired 30 properties and manages over 6,000 units, all thanks to their dedicated team and valued investors. Discover their current deal offerings at vikingmultifamily.com and start your journey to financial freedom today.
I would say that is the number one thing that I hear from people is that, oh, I got this great raise, or, like I'm going to be making so much more money next year. And then they do their taxes for the first time and everyone's like, wait, what? Like, they don't understand. They're like, where is my money? Like, I feel like I'm not even making any more money. And or into the man, like, it's like,
yeah. Well, it's hard, and it's easy to get. And look, professionals. I've worked with athletes. I've worked with entertainers. I've worked with doctors. I've worked with blue collar business owners. You name it. It's easy to get caught up in doing whatever you do well and do it every day. And if it looks like, hey, I'm making $1 million, I'm making $5 million, I'm making $10 million, your lifestyle kind of adapts to that, right? But that's not really. Oftentimes people don't look at what is your net take-home income, right? So if I can enhance your take-home income through this, it alters the ability to live a lifestyle more comfortably.
Absolutely.
Right? So that's where we start. And there's a lot, most people think, oh, geez, I'm a W-2 earner. There's nothing we can do. That's not true. That's a myth. There's less you can do, but there's still things you can do to mitigate at least 40% of your net annual liability.
So I was actually just going to ask you, you're leading perfectly into the question I had, which was how small, and I use that word like vaguely, is like of an investor or new of an investor needs to be like in the game in order to work with you?
Great question. So I would say 2-part answer to this as well. I would say if you're making money and paying full boat in tax, you should reach out to a tax strategist regardless, if we're just focused on tax to begin with. Obviously, for the investment strategies we use, you need to be at least an accredited investor or higher. And for the income, for the tax strategy, you need at least a $500,000 income or more. And I say at least, I mean, that truly is the bottom of where we can help.
Okay.
Ideally, you're $1 million income and you've got 5 million liquid investments. That's where I can really pull those levers we talked about and make a substantial impact very quickly for you and your family. So that's kind of where we start, because that's just critical mass for us. But the strategies still apply even beneath that. It's just not a fit for our firm, but there's firms out there that help you too.
When you guys have someone new who joins you and you're doing those audits that we were discussing, what is probably the most common inefficiency that you're seeing outside of taxes? Like, where are you seeing the holes or gaps?
So outside of taxes, which is certainly number one, it's the misalignment of your investment strategy. And what I mean by that is you're saving, you're frustrated that you don't have enough passive income to take pressure off what you're doing day to day.
Yeah.
Yet you're not investing for income first, right? So when I can get a hold of what you're doing, identify what are your actual returns in dollars and cents. We don't deal with percentages. Percentages can be very misleading. So we look and show what is your actual baseline of what you're making, compare that to what you should be making for the risk you're taking. And then what would that look like if we flip this to an income first approach? And how does that change your day-to-day life? That's the realignment of your entire investment strategy, big picture. And it doesn't mean you need to necessarily fire your advisor that you play golf with every Thursday and, change your whole life in one fell swoop. But small incremental changes in that, even if you just take the tax savings, which is a common thing, and reposition that to the new strategy over time, it makes a substantial impact. But that's really number two, right? It's tax, and then it's misalignment of strategy relative to your goals, which everybody's goals, whether you say it is or isn't, it's financial freedom, right? It's work optional, financial freedom, do what you want to do, when you want to do it, with who you want to do it with, and where you want to do that. So at least that's
finding a passive income, I think, is probably the number one thing. I mean, we were with Viking Capital and people are looking for that ability to have a secondary income or a passive income that, like you're saying, will replace their income that they have now so they can have more time freedom. And I think it's very interesting to know that not only do you guys do the strategy for the investment piece, but I think that tax mitigation piece is also a piece. I don't know that a lot of people think about that when they think about how do I create more income for myself.
Yeah. So, and that's why I have so much respect for Viking and your organization in general. Like, you look at the track record, it's what we talked about. You look at the track record, you look at the history, you look at the performance, but you look at the people running the show behind it.
Right.
That's what makes the difference. But if you can add tax strategy on top of that, and I can free up another even $200,000 and you throw it in a project of Viking multifamily real estate, now you're getting tax benefits, you're getting income, and you're getting growth on top of that. That's leverage on leverage.
Right.
Found money that's now paying you 3 different ways. Do that for 5 years, and you've added a couple $1 million to your portfolio that would be gone.
Right.
That's a totally different game that we play versus here's your stock bond allocation and here's your 10 mutual funds you own and 3 ETFs, and don't worry, I'll talk to you next quarter. And that's 2 totally different worlds we live in.
You actually just made me think of something. I had another question, but now you made me think of one. For you, when you guys talk about compounding your growth or income, do you guys do anything with the 1031 process?
We do. Yeah, so we certainly use the 1031, right? So tax deferral is one of the key drivers, right? If you notice, ultra wealthy, you've seen it in political races, you hear it all the time. It makes people mad, but it's strategy, right? And that's what we're trying to bring to the masses here is if you can keep $1 of tax in your pocket, even if it's deferred and you eventually have to pay it, that's time that you can grow money on that and compound interest on money that should be gone.
Right.
31 exchange is excellent. We use a certain type of trust structure that allows you to not just transition to real estate, but open up the doors to invest in anything that you like, gives you a little more freedom. But yes, 1031 exchange, deferred sales trust, those are 2 key strategies for us as people transition especially out of active real estate ownership, moving into passive. We do a lot in that world all day long.
Amazing. So I have a quote that I pulled from your website, and you talk about how risk management and exit planning together are part of your approach. Can you explain that relationship?
Yeah. So you'll hear me talk on stage or podcasts about, and what I'm really saying today in different ways is you have to run your family finances like a business, right? If you control your outflows, maximize your inflows, right? That's essentially business 101. So the risk management of that is not knowing what's going out the door, right? That's the wealth protectors of the 6 levers that we kind of base our thesis around. And then the wealth enhancers is the growth side of that. So if I can help you defer tax on a business exit, a real estate exit, and then show you how to actually take the income first approach and replace the income instead of going to a traditional stock bond portfolio and paying you out 4% of your total liquid assets, right? But actually replace your net earned income in whatever source it came from. Well, now the risk is much different because you've diversified your income streams. You actually don't have to readjust your lifestyle, and you have critical mass. You're keeping the dollars in your coffers and your family's net worth, right? As long as you possibly can.
That was like my next question for you was during like a liquidity event or preparing for a big investment like that, you're talking about protecting and growing someone's wealth all in one. So is that the main strategy that you use for that?
It really is. Yeah. So again, the process is first we do the audit that allows us to establish your baseline and see where you're at. What are your risks, right? Where do we need to focus? Once they're identified, then we know we can draft a game plan to mitigate that risk, right? Once we're mitigated those, and we need some time prior to an event like that, ideally 6 months or more, because it takes some time. The other side of this is educating the client too, right? I can throw strategies at you all the time. If you don't understand what I'm doing, you get very uncomfortable.
Right.
Because especially it's usually different than what you traditionally have been taught. So we have to educate along the way as we implement, and we just need time for that. So if we can identify the baseline, strategize at a game plan of how to mitigate those risks that we identify from the baseline, and then put that plan into action and implement that, by the time you go through that exit, whatever that may be, real estate, business, payment, like general retirement, everything is set, right? So you're not moving into that in a worried, panic state when you're changing your entire life, right, as you know it, especially if it's your business or your real estate, that's your baby that you grew for years, right, your identity. And now you're giving control to somebody else completely with no real game plan and no trust and no idea how you're going to replace your income. So
I feel like a lot of people think a lot. Like they're like, yeah, that sounds like a great idea. Or I heard this and I'll talk to somebody at some point, or I'm going to do it. I'm going to do it. You know, they play the like, it's coming game and they wait and they wait. So for people who maybe you don't have the timeline you're talking about, because you're saying, you know, like it would be great if we have a plan and then we get you ready for that plan. But let's say you have somebody who's listening and is like, man, like I have a year and I'm trying to get out of my business or I'm doing something like that. Do you have strategies or an approach that they could still utilize in such a quick turnaround that would be beneficial?
we've done it in a month prior to a transition. We can do quite a bit even after, especially if it's in the same calendar year. So that happens a lot, right? It's oh, I should have found you sooner. I didn't take action, right? Because I say this all the time, like I can tell you all this stuff. I'd rather just show you, because if I can show you, you're probably going to actually take action.
Right.
And I can't help you until you do, right? Like I can't make you jump. So yeah, the shorter the time period, the faster we have to move, but there's always strategic things we can do. Even after a transition, there's plenty we can do.
Okay.
Should have planted a tree 10 years ago. When's the next best time? Today, right? Plant it today. Let's get moving.
Sorry. So talking about timeline and people taking action, how do you help people understand that planning for your legacy is really not optional? It's something that it should be on the forefront of your mind.
Yeah. The best way I found to do that, because again, and especially when you're starting to use the strategies, it's so new to some people, and the numbers truly compound so quickly because you're taking what should be gone, you're putting it back in your estate, now you're growing it exponentially. It almost sometimes takes a while for people to believe it's real, right? So the best way that I found to get them to take action is just show them. So when you reach out to us, that's the process, right? You'll do an intake form, but we work on real results. Like, that's why I left my old world. If I can't show you what I can do for you and show you with confidence that it's real and that you believe in it and you're comfortable with it, then we shouldn't even be doing business, right? But I'll show you before you even have to commit to anything to know where you're going to go and what the end result is for you. And that usually helps people quite a bit make a decision to make a change.
That's great. So you talked about how you advise people to make sure they also have a CPA and then they kind of do checks and balances. When you talk about estate planning, do you also do the same thing with like someone's estate attorney, or do you kind of try to own most of that process, or what does that look like for you?
No, so really I become your advocate, your fiduciary that can speak all of these languages on your behalf,
Okay.
right? And one of the most efficient things we do is our board of advisor meetings. So you're busy doing what you do well. If you were in finance and had a financial planning background, you wouldn't need a person like me or my firm anyways, right? But to coordinate your estate planner, your CPA, your tax strategist, your insurance person, your investment advisor, and maybe you have 2 or 3 investment advisors, to coordinate all that, speak all of the languages, get them on the same page on one coordinated plan
Hmm.
with strategic direction quarter to quarter is very hard.
Yeah.
Right? So we just step in and do that on your behalf. So we don't replace anybody unless you want, options to a referral to be replaced. But if you like your team and you're comfortable and they're efficient in what they do, we just help streamline things and coordinate. But that's the overarching plan and the strategy and the implementation with the people in your world that you trust.
Okay, amazing. So what does that look like? So if somebody comes to you and they say, okay, they've listened to the show, they're like, I have to be a part of this. I need this. I need the tax mitigation. I need to start strategizing. They're ready. They're bought in. They're sold. What does that look like once they've signed on or they've given you a call?
Sure. So pretty simple process, right? So you reach out, you're going to do the intake form. The first part is the audit, our wealth diagnostic financial audit. We kind of use those terms interchangeably. That's how I can show you exactly what I can do. And that's a $7,500 fee with a double money back guarantee if I can't
Amazing.
triple your investment in that, right? So there's zero risk in that to find out what I can actually do with the strategy for that. If you want to continue from that, then you move into a financial planning client, and we're selective in who we take and who we can really move the needle for. But once you get through the audit, you're going to know exactly where your opportunities are, what the net benefit is to you. And that takes you have to upload your tax returns, your investment statements. That's really the only heavy lift on the client's part. We'll come back within 2 weeks of the full audit and your results. Once you decide there, and you can take that and implement it and go. And a lot of people do that, right? Strategic. You can just take it and execute the tax strategy and a few investment opportunities and keep moving. If you need more help than that, then we talk about a longer term, traditional financial planning that's more of a retainer fee for service, but everybody's different in the levels they need. So we have multiple levels of
Oh,
how
great.
much service do you need? Where do you fit in? So that's customized to the client. But that's how that works.
Okay, great. Well, I have 2 more questions for you because I know that your time is of the essence, and I want to make sure that you have given as much as we can to our guests and our listeners. My second to last question for you is when we talk about how most people will have either one or more people helping them through their advisory or investment journey. What is one question that they should be asking their advisor that they have right now?
One question. That's a great question in itself. Kind of depends on what type of advisor it is, right? So I'll give you 2 answers. So if it's your CPA, I would ask them, what is the proactive tax strategies we're implementing this year to mitigate my tax liability? If they say anything other than give you an answer of 3 to 5 proactive, creative new solutions, you need a tax strategist. If it's your investment advisor, this is where we start with the baseline. First of all, will they give you a performance report with actual performance and itemize your fee on it? It's amazing the pushback we get nowadays that they don't even want to do that because they've underperformed the market.
Wow.
So that's red flag number 1, right? Red flag number 2 is ask your advisor, what are the top 10 individual positions I own in my portfolio?
Wow.
And if they can't answer, you have a major issue with who you're working with.
I love those answers. And I appreciate you giving us kind of like multiple scenarios because everybody, I think, listening, kind of has different priorities right now. So I think that's fantastic. Thank you for that.
You're so welcome. It's a great question. I hope it helps people.
Well, my last question is for everyone listening who fits, in the same realm of what you do in the 500,000 up, how can they find you or how can they at least follow you to learn more?
Yeah. So at Cornell Capital Holdings on Instagram, cornellcapitalholdings.com is our website. Info at Cornell, just like the college, Capital Holdings with an S. That's the catch-all email that the team will get right back to you. So or you can just search my name. I'm pretty easy to find regardless, but those three ways kind of get you streamlined into the system. So
amazing. Well, I thank you so much for your time. I know I learned a lot, but I hope the listeners did too. And I appreciate you taking the time to be on the show today.
Yeah, it was great talking with you, Samantha. Thanks for having me on.
Thank you for tuning into this episode. We truly appreciate your support. Don't forget to subscribe, leave us a review, and share the podcast with your friends. Until next time.